All right. Well, as Bitcoin seems to be closing in on its all-time high, gold is breaking below its 200-day moving average as we speak today with my guest, Grant Williams, the man behind Things That Make You Go, and the co-founder of Real Vision. Grant, good to see you again.
How are you, Daniela? Nice to see you too.
Yeah, very happy to talk with you because this Bitcoin versus gold debate is on fire again. Just when we thought we had put it to bed, no, alas, it's alive, quite alive.
Yeah, no, it is. It's absolutely alive and it's raging.
Well, the gold bugs are frustrated here. We were hoping we'd hit 2000 and keep moving beyond. And on the other side of the equation, we have Bitcoin that seems that it will break through its all-time high any second here.
Yeah, so, well, look, I mean, for me, I think you have to take a step back and first of all define what a gold bug is, okay? Because there's two very different ways to look at this. If you were really looking for the price of gold to go up and you're interested in price speculation in gold, then you're going to be incredibly frustrated because all the charts say it was going higher. The charts now will tell you it's going to go lower, and it's certainly it's failed at that 2100 level. It's gone back through 2000, and now if you look at the charts and the breakdown, it could go back to $1,700. So if you are a gold bug, and I use the pejorative version of that term because what a gold bug is in the pejorative is someone who's just fixated on gold and thinks the gold price is going to go to 10,000, et cetera, et cetera. If that's you, you've had a rough few weeks. There's no two ways about it. If you have gold in your portfolio as protection against financial malfeasance by central banks, inflation, all the things that gold does for you, the price doesn't really matter, right? You still own your gold. From the year 2000, you're up almost 600% on it. And if it's a long-term holding, if it's a portfolio allocation, this stuff is just noise. It doesn't make that much difference. So for me, yes, I look at the chart, I look at what's happened with interest, but am I sweating the fact that it failed at 2000, it's back down? Honestly, I'm not. It doesn't cause me any lack of concern.
But you're also holding gold long term, which is the operative word here, right, Grant? So when
but I think that's the whole point. People need to understand what it is they're looking for. If they're looking to make money out of gold, then it's just a speculative trading vehicle. And therefore, whether it's gold or it's Apple shares or it's Bitcoin, whatever it is, you are just a hostage to the daily fortunes, and you need to understand that.
Perfect. So on that note, I called a few of my sources at various bullion desks, and the feedback I was hearing is that a lot of clients were calling in saying, hey, they want to liquidate their gold to buy Bitcoin. And we're seeing quite a lot of that.
If you have a gold position, now I'd be interested if that was people with physical gold who are liquidating physical gold to own Bitcoin. I'd find that quite remarkable, to be honest with you, because there's an additional level of interest, there's an additional level of commitment in owning physical gold, which means you're not generally a price speculator. If you want to speculate in the price, you're going to buy the ETF, right? So if you own physical gold, you've taken the extra step, made the extra commitment to sell that to buy Bitcoin. I find very strange indeed, because you're selling out of an asset you own to speculate in the price of Bitcoin. If you're selling the ETF to buy Bitcoin, I totally understand that. It's FOMO.
Let's talk economy now on a larger scale, Grant, because I mentioned you are the co-founder of Real Vision. You get to speak with a lot of heavyweights on a day-to-day basis, ranging from Jeff Gundlach to Ray Dalio. What are the what's on the horizon? How do you see us starting 2021? There was so much talk about the economy before the election, but what's really most important here is what lies ahead.
Well, yeah, look, always. But what lies ahead, if you look at the forecast, is a V-shaped recovery. What lies ahead, if you look at a lot of the charts in places like the retail sector, places like the leisure sector, is a set of charts that have had a V-shaped recovery of sorts, powered exclusively by stimulus, and are now rolling over. So we're all kind of hostage to this vaccine. Everyone's hoping that a vaccine is going to be this magic bullet that puts the economy back on track again. frankly, it's going to take a lot more than that. I mean, where we are now, with a lot of the stimulus measures running out and needing renewing again, it's very difficult in many places to justify that with stock markets at all-time highs and vaccines coming. How do you justify the US, for example, going over $4 trillion in debt? Look at the UK, we're on course to borrow 350 billion this year, which is unprecedented outside of World War II. So we're in this situation where optically the headlines look good about stock markets, about vaccine and the hope for that, just at the time when the chances are more stimulus is going to be needed. If you look at, there's a piece in the Wall Street Journal this week about the hundreds of firms who've failed in the US since receiving stimulus checks. And so we're in that tricky phase here where the economy, which has been reliant upon stimulus, has bounced back to a degree. But if that stimulus is now withdrawn, because supposedly we have a vaccine and we have a strong economy and a strong stock markets, I don't think the economy can stand on its own without that. So it's going to be very interesting to see what happens. I honestly don't know, but without stimulus, I think we're going to see the economy roll over and probably the market roll over.
The market roll over?
Yeah, I think unless we get more stimulus, I don't think this market is trading reflective of the fundamentals, and those fundamentals need more stimulus to stabilize the economy.
Which sectors do you like right now, and which would you avoid?
Look, I think, again, it's time horizon. It's always time horizon. If you're looking to speculate in the next few weeks, then, look at Bitcoin, look at some of these technology stocks. But for me, I think what's much more important to understand is the potential that we're at a secular inflection point in terms of the inflation-deflation debate. And I think personally that commodity sector positioning oneself for an inflationary mood in markets makes an awful lot of sense. And if you look at the outperformance of the S&P versus the commodities, for me, it's one of the all-time great charts. You can buy commodities at levels versus headline equities that we've literally never seen in 500 years. So anytime I see that, my ears prick up and I'm interested in. So for me, I love the commodity stocks right now.
But which ones in particular, Grant, for example?
Well, I think the gold mining stocks.
Okay.
I think because you get the double whammy there.
Right.
But I think even if you look at some of the ETFs, you look at the headline ETFs,
Right.
the commodities ETFs, the agricultural commodities, all those ETFs that give you broad exposure to the reflation trade. I looked at them the past week, and if you look at the trade versus the S&P,
Right.
you'll find the S&P up 236% in the last decade, and you'll see all the commodity indices, all the commodity ETFs actually lower over that period. And that, to me, gives you a great opportunity to play this inflationary trade.
Yeah, Grant, as we wrap the interview here, I'm curious to get your thoughts on some cabinet picks that have been rolling in, particularly Janet Yellen as a Treasury Secretary. What any thoughts on that?
Look, it shouldn't be a great surprise to anybody, right? I mean, this is an establishment pick. It's someone who understands how it works. And look, let's be honest, it's probably the right person at the right time for the right job. If you are Biden, you need someone who can bridge the gap between the Treasury and the Fed. There's no doubt about that. She understands both worlds. You need someone who has proven they have a willingness to print money. She has that in spades. So look, it didn't come as any great surprise to me that she's in the front line to be nominated. I suspect she will be nominated. I suspect she will get confirmed, and I suspect the establishment will have the exact right person in the job at the right time.
And willingness to print money always tends to bode well for gold, Grant.
Yeah, yes, it does.
Oh, we'll see. I appreciate your thoughts. Thank you for coming on. Come back more.
You're welcome. All right, good to see you again. Take
Grant
care.
Williams of Things That Make You Go, and the co-founder of Real Vision. Thank you again for joining me, and thank you for watching this installment of Stansberry Research. I'm Daniela Cambone.